Hey, good morning, everybody. Good morning. Good morning. And I just got a alert for myself. Apparently, I don't know. I don't know who sent that. It came to me in my name. That was kind of weird. Anyway, um, good morning, Infinity, David, Larry, Sergio, Valerie, Nikki, Brian, JB, Giovanni, Craig, Arturo, Mary, Francois, Tim, Svenborn, Laura, Randolph, David, Ben, Ted, Jan, Merle, Kevin, Darren, Don. Um, hey, everybody. My mind's still working just a little slow. Not 100% yet. Although my body battery finally hit 100 again. It's like only the second time ever since I've gotten the Garmin thing. It hit 100. Uh, last week, yeah, just to give you an idea, my activity tracker thing here kind of keeps track of this thing called body battery, which is like a energy level thing. Last Thursday, I guess it was last Wednesday, I went to bed at and had a 5 on my energy level. When I got up on Thursday, I had a 6 on the energy level. So um, yeah, that was Thursday was a rough day, and Friday it wasn't much better, and then Saturday just marginally better, not really better. Sunday, so yeah, up and through yesterday. Yesterday it finally popped up to a 90, and then today it hit 100. So, uh, but as you can tell, hey, there's Kimberly. She's feeling rough too. So, we apparently Kimberly went to the doctor yesterday and found out this is flu B, and she swears that I gave it to her. So, I guess we'll let her be right since she doesn't feel good. So, anyway, all right, biggest downside risks for 2024. We only have 3 trading days left this year. Three, three, three. So if you need to get any kind of tax harvesting, any kind of offsetting, or anything like that, you got to get it done today so it's settled by Friday. All right. Um, if you have never played this game before, there's a settlement date, and you got to have trade day plus 2 in the United States, and so that makes today the day you have to do your trades. So unfortunately, that caught somebody in Discord. They were having a conversation about how NVDL took a giant bath. I almost guarantee you it was tax harvest selling, people liquidating. You may see this all over the place. If you got some tax harvesting going on, um, last night, today, that's they got to take care of it, and so the next 2 days will be different tone in the market. Now, I brought in, as I mentioned just a second ago, I brought in some biggest downside risks as we head into the new year. And these are just some food for thought items here. So, over optimism of a return to a pre COVID economy. That's kind of a risk, right? If we think about it. Higher for longer cause something to break. So maybe they were too aggressive. I've kind of talked about this. Maybe they were too aggressive, and maybe they broke something, and it hasn't yet shown up. That those rate raises have a 2-year lag to trickle through the entire economy. We're coming up on 2 years in March. All right, and then all those other rate, that fastest rate raise in history. We're coming up on 2 years behind that. So they think they're on top of this thing, but they may actually be wagging the tail, holding on to the end of the tail, trying to wag the dog with the end of the tail. And it might break something. And it might already be broken, and we just don't know how bad it's going to get yet. So Now, there's a maturity wall that could bite us. There's over 600 billion in global high yield bonds that are going to mature by 2026. Now, we're just heading into 2024, but that's 600 billion of maturity that's going to hit. And we'll see how that comes into play here. So, are they going to be able to refinance those bonds at these higher rates? Are they going to be able to afford it? It's not just tiger by the tail. I mean, they're trying to wag the dog. I mean, they're trying to move the economy by holding on to the end of the end of the tail. That's really what I was talking about. Grabbing the tiger by the tail is, that's a whole different thing. But they're trying to, wag the dog by just the end of the tail. Now, another thing, the bond market, maybe it's finally right and we get a recession. Recession could arrive. It's a risk. I'm just discussing some of the risks here. So, think about it. When everybody doesn't think it's going to happen anymore, does it happen? So, nearly 100 years of data suggests that we haven't taken care of this thing yet. Why is this time different? Maybe it's because they broke something. I don't know. Of course, maybe they broke something and I don't know. So the Magnificent Seven, maybe the bubble bursts. Right? We've had a lot of euphoria, a lot of money flowing into those. Mama Nat, as I was talking about last night, and Microsoft, Amazon, Meta, Apple, Alphabet, Netflix, Tesla, Mama Nat, and what if money flows out of those? What saves us? All right, that's the S&P and NASDAQ are highly correlated to those 7 tickers right now. A lot of our gains this year, all tied to that. So a cracking of those 7 could drive stock correlations significantly higher, resulting in fragility across the S&P. And some other risks here. Geopolitical risks escalate. We're seeing the Suez Canal and Cape of Good Hope shipping routes coming into some risk right now. Geopolitical risk. How does that play into global shipping, moving of goods and services from Asia in through Europe? All right, we have sovereign risks resurfacing. We have the debt to GDP ratio. I've talked about this for a little bit. This could create a problem. Could have more debt problems. Anybody remember the Greece debt problems? It turned into a global fiasco. Some say it was part of the GFC. So another one, 0-day expiry options. Are they a threat? Some think so. They're becoming more and more popular. We're seeing ETFs that play those. And we're seeing VIX not pricing in the real risks of the market. So we could see a Volmageddon, as in volatility, Armageddon. And I don't think Vol's dead, despite all the things that have been said. So these are some things to watch out for. I mean, these are some potential things that could rear up in 2024. We typically have a news cycle. I don't know if you've ever, I don't have a chart for it, but there's a news cycle where usually the headlines last about 2.5 weeks. That's about the attention span of us humans, and then we pick up a new story. That doesn't mean that they don't overlap slightly, but about every 2.5 weeks, we have a new peak story. And it's not necessarily all stock related. It's not necessarily all any one sector. We tend to hop around from, sports figures to celebrities to movies to this to that to crises to yeah, I have a computer screen. It's just a list I've sketched up, so it's not anything I prepared to share. So anyway, and moving on. So we have all trading involving a substantial risk of loss past performance, not necessarily indicative of future results. This presentation is intended to be informational, educational, fun. It is not a recommendation to buy or sell any financial instrument. No stocks, no options, no bonds, no futures, no forex, no cryptos. Don't long them, don't short them, don't trade them. If you don't trust people, don't buy stuff from them. All right, I don't care how slick the sales copy is. If you desire personal financial advice, you got to hire and consult somebody that's a financial advisor, all right, registered. If you're doing business with people that aren't, be careful, all right? I'm not a financial advisor. I happen to get lucky a lot and do pretty good for myself, but I'm not a financial advisor. I don't know everybody's financial conditions, situations, so be careful. Out there, you probably will lose money at some point while trading. And the financial calendar for this week is still pretty devoid of anything. Had a holiday Monday, like I've talked about, just a low conviction, window dressing type of week. We just have a few things we got to get through, and then we're on to the new year. Brand new year. So I looked up this technical definition of a Santa rally yesterday, late in the day. It starts the trading day after Christmas and runs 2 trading days into the new year. So that would have been yesterday, today, tomorrow, Friday, and then we pick up Tuesday and Wednesday of next week. 79% of the time we rise, and that average rise is about, I think it was 1.8% over the last 100 years or something like that of the stock market. So we could see a small grind higher into that Wednesday of next week. Now, after that Wednesday, watch out. There tends to be the highly correlated to a Santa rally is also a large January pullback that usually takes the entire move back. So that historically is also the case. We could see an outsized move down late next week, or at least take hold. Now, I don't think anybody's surprised by the fact that I say that we're kind of overcooked to the upside here. Still overcooked to the upside. Still pushing the limits here. In fact, we went even higher yesterday. This is getting ridiculous, all right? We're going to pay the piper. This complacency, this overall just continued grind higher. We're pushing up to 79 yesterday on the extreme greed. We're going to get a pullback, and it's going to somewhat hurt. Remember, everybody thought we were Black Monday crashing as we went into October, or as we got near the end of October. Right here, everybody swore we're going to do some epic 1,000-point crash. I heard it so many times. Oh my gosh, I was just frustrated with it. Everybody knew we were going to crash the markets. We were going to have some giant, big downside flush. All these mainstream media people, all these, everybody telling me I was wrong. We're not going to recover. There's no way. we're going higher from here. And then boom. We're just points away from a new all-time high. Just a few points away. We didn't do the retrace, and that makes me especially nervous here. This means we're running on fumes. Now, could we just keep being irrational? Sure, we can be irrational way longer than anybody can stay solvent. I mean, that's just the way the market works. You know, that's an old market idiom from back in the 70s. All right. This thing can keep being irrational, keep being crazy. And at some point, though, the higher we go, the bigger it's going to come back down. I can show you tons of charts where this example holds true. And there's Mora hitting a 52-week high. Look at that. Right on the nose, too. Look at 28.55. Can we get 34? Maybe. Can we really squeeze it? Up till 100? Maybe. If we get up into 120, I'm booking my profit. I'm telling you, I don't care if my plan's out for years. I'm booking the profit. It's one of those. This is also one of those, like, if we go up epically, if we get some epic squeeze, we're gonna get an epic drop right back down. I mean, look at this one right here. Epic up, epic down, epic up, epic down. Maybe it doesn't come all the way back down, but it comes down. You may remember this one? Epic up, still working on the epic down. There's another one. Epic up, and never recovered again. If we get the crazy levels, ludicrous levels, you might want to book the profit. We've been crazy before, but this one could be the new crazy. This one's gone up crazy, coming right back down crazy. We're going again crazy. It's related to maybe one of the craziest tickers there are. So, just telling you. Look at BTBT go. Yeah, baby. Getting going. Things are getting spicy. Now, what's the big deal? Here's the big deal right here. Here are the Bitcoin ETFs. The SEC has said they do not want in-kind for spot ETFs. They had a big meeting last week, Friday. Told everybody you got till this Friday, December 29th, to revise your S1 for your ETF and resolve our dislike of in-kind transactions. They want cash-only transactions in and out of Bitcoin. Those that don't revise their S1 and get it in by Friday are not going to be in the first round. So you can see we've got 1, 2, 3, 4, 5, 6, 7. 7 ETFs are listed on here as cash that could potentially be in the first round. The ones that were in the meeting on the 21st are highlighted in yellow right here. That was Grayscale, ARK, BlackRock, VanEck, Fidelity, Valkyrie, and Franklin. Now here's the ones that already have tickers. So GlobalX, probably not. They haven't filed with DTTC to get their ticker. Franklin hadn't filed with DTTC to get their ticker. So there you go. There's the, Grayscale already trades under GBTC. They want to convert to an ETF instead of a trust. ARK B is going to be their Bitcoin, ARK Bitcoin. Then BlackRock's is going to be IBIT. And then Bitwise is going to be BitB. VanEck is going to be HODL, HODL. Play on hold. And Wisdom Tree, BTCW. So all these new ETFs are going to potentially hit the market here in the new year. Some of them might not make it. The ones that have tickers listed have already filed with DTTC to get their ticker approved. We'll see what happens. So if the SEC has said, if they get their S1s all tip-top lined up, and none of them have an AP agreement, which is an approved participant agreement, they have to get that approved by the SEC by Friday as part of their S1. BlackRock proposed a list of approved participants, including JP Morgan and Citibank. They didn't get that approved yet. So this all is going to be interesting. And for those that get their S1 in by Friday, they're probably going to be approved either on the 9th or the 10th. They'll be in the first batch. If they don't make it by Friday, they will not be in the first batch. That gives the SEC about 5 days before the 9th and 10th here. So there you go. That's what we got cooking. Yeah, look at BTBT go. Beautiful. God, I can't imagine how much money I'm up now. I was up 14 grand yesterday on that move. It's going to be beautiful. How high am I go? 100? 200? Coin. Yeah, just grinding higher a little bit. Not really. See, Coin's not directly involved. They're a broker. So, yeah, ludicrous levels. Yeah, that's what I'm talking about. Like, if we get to ludicrous levels, book some friggin' profits. Like, I'm not even kind of like joking. Like, you should not hold on to NC. I mean, maybe hold on to a few shares or something like that, but it's not the time to play around. This is the time to be booking profit because it's going to come back down. All right. NQ grinding higher. Russell grinding higher. Oil getting a little bit of pullback. Figured that would happen. Watch for this to break on out. That was a big update. Of course, we take it back a little bit. That's pretty classic. Looking for continuation on that move. GC. Continues to grind a little bit higher. If we can get up out of this, it may be a grind to get through that tail too. We rejected that area hard when we popped up there. A lot of profit taking. Bitcoin just kind of hovering, waiting. Do we break back out? Possibly. What could Bitcoin do? Bitcoin could potentially, it could go crazy. Like we could see something we never see again. So be careful. This ETF approval situation could create a crazy situation. It could also create a sell the news situation and everything just flush. I don't think that's going to be the case, but we'll see. Ethereum just chopping at the top here. That's a good sign. Rejecting that break back down. don't want to see it get below this uptrend of the lows. If we get below that, we're going down. As long as we stay up here, probably going higher. 2,500 is the next upside target. Dollar, yeah, we're going to flush on down. Back to the 99 area, and then mid-90s below that. CYTK, pharmaceutical, biopharma, ridiculous. Must have had some kind of I don't see it on the. Must have some kind of deal or approval right there. So I posted it yesterday in Discord. It was in the article I posted yesterday. And FWBI is looking like garbage right there. Tech stuff. ERGX. That's another one. Looks like complete garbage. Chopping around. Nothing. No, not even tradable. Coin making the list. We could see that. 270 back down. That's where we met this resistance before up here. When we were all hyped up. Right in there. We could see it rally right up in there. Do I regret dumping my shares? Heck no. I made good money. Like thousands of dollars. Thousands of doll hairs. SMCI continues to churn. I think we're still in a corrective situation here. Be careful. I would not mess around with this. I am not messing around with this. Could definitely burn you. While we're on the subject of things related to NVIDIA. NVIDIA hanging out up here at the top of the range. We may see it extend up to 532, but be careful. Look at that. I always talk about these things. You got to make sure that you're careful when you play with leverage. That one jumped down 10%. Seeing people booking. And when you read the prospectus, these usually have a 1.5 leverage long only during the trading day. These are not designed for overnight holds. Be careful, all right? A lot of us, when we see it, we're like, oh, 1.5x leverage, I can hold that and make the leverage. But when you read the prospectus, they rebalance daily. That daily rebalance can get you. That's what happened right here. Seeing people liquidating and rebalancing overnight, causing a 10% drop, where we don't see that on NVIDIA. So a lot of these are only designed, that's why I say read the prospectus. They're only designed to match the performance on a single trading day at the rate. So NVDL is a 1.5 leverage for each trading day. It's not over a long term. Not over multiple trading days. So LABU, biotech leverage. Oh my gosh, this is like the most dangerous thing. Watch for that rejection at that trend line. If for some reason it breaks out, that could be interesting, but that's like super dangerous. That's all I gotta say is super dangerous. It's a downtrend, just getting a little spike and may continue down, especially since money's expensive. TMF, that's just not the place I play. I don't play in biotechs. Even though they make the list, seems like every day. And HYT. Go look at that one. Oh, look at that. Beautiful. That was a double dip trade. We have to book the profit on that one. Holy moly. These aren't supposed to move that fast. That was pretty nice. CING. 1 for 20 reverse split and keeps going down in a blaze of glory. There wasn't much on the list today, just so you know. Burr. Nothing. EBON. eBank International. Nothing. It's interesting it's listed on the NASDAQ. And that looks absolute garbage. NTES. Continuing the correction. I do kind of expect this to go a little bit lower. Find support down in this zone. Then turn up. IOVA. Another biopharma. MedTech. Careful there. Because they're pretty hard to trade. Especially when they're under $10 and a biotech. That's like 2 strikes against it. TRMAMD. Yeah. So the big event is the Bitcoin thing. I mean, and then we have the halving coming up. So this is just like the first event is this spot ETF thing. And then we get into halving in 114 days. So yeah, that's still a few months away. April 20th in the new year. We'll have some time to digest these spot ETFs. And then the real fireworks can happen. But that's a long lag time. That's a lot of time for crazy to happen, come back down, and then we reset. So, alrighty, bias for the day. Still expecting us to grind on up, tag a higher high. I've been expecting that. We may continue to do that for the next 5 days, 5 trading days. Remember, Monday's a holiday, so we can see this grind on up, tag that higher high. Then watch out in the new year. This is already showing some instability in here with that 70-point pullback we got last week. 70-point pullback, grind, 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 grind. Markets don't just grind higher. Go look for another period where we went higher that many days in a row. Just doesn't happen very often. Be careful. All right. Pitter patter, let's get at her. Good luck out there. The account you save may be your own. Remember, it's not being wrong that costs you the money. It's staying wrong. Don't stay wrong. And make your plan. Know where your line is. Cut your losses. And then go with a new plan. All right. I'll see you guys tomorrow. Make sure you're subscribed. Make sure if anything I said was awesome, that you give me a like, a thumbs up. And I'll see you again tomorrow.